Hey traders, welcome to our top tier outlook for Sunday, August 6th. Great to see everyone. We are taking a look at the very early, this is basically the Asian Open in the S&P, in the NASDAQ, in the Dow. And this is really a great time to take a quick look at what it is that hang on one sec. My night light just came on. Hang on. My screen just went red. Like I'm in a submarine or something. There we go. Woo! That was crazy. All right. There we go. So we're taking a look at the early part of the new week, the first look at the market, and it's going to be very important, and not necessarily right now at 6 p.m. Eastern, or even at 8 p.m. Eastern, or even at 3 a.m. tomorrow. Key times, 6 p.m., we get the Sunday Open, 8 p.m., the Asian session's completely underway, Sydney, Tokyo, Hong Kong, Singapore, 3 a.m., that's when the European and the UK markets are both open. That's not really going to be the most important part. What are we seeing at 7 a.m. tomorrow, Monday morning? And then obviously as the bell rings, we get the first 30 minutes of the week. Are we going to see the two particular things I'm really interested in? Is Apple going to catch a bid? Because look, not everything in the broader averages is necessarily A, not buyable, and B, bearish, right? Bearish momentum is very different than a mean reversion. A mean reversion is simply those pullbacks that would be more sort of the buy the dip conversation that a lot of traders have, like myself, right? Keep calm and buy the dip. But when do we do that? In uptrends. So I would keep a really close eye on Apple, and I'd keep a really close eye on the long bond or the 10-year, whichever really you'd like, ZB or ZN. It's going to be very important that those catch a bid, that we start to see buyers step in. Apple, because it's the number one weighted stock in the NASDAQ, in the S&P, and in the XLK. XLK, number one weighted sector in the NASDAQ and in the S&P, number two, by the way, in the Dow. So where Apple goes is going to be very important. We'd like to see it catch a bid. And the other thing is, could we leave tech alone for a bit? And this is definitely something we've been bringing up quite a bit, not only in the Sector Secrets Mastery. And I know a lot of you have signed up for that trial. Gang, tomorrow, midnight, and that is it. That's going to be the cutoff on this trial month, this trial package that we've got going for the Sector Secrets Mastery. You can check out all the details and sign up at simplertrading.com/opportunity. And ultimately, I think it's also available at simplertrading.com Outlook. Outlook as well. simplertrading.com/Outlook. Either one will get you there. You can check out the webinar from Wednesday's replay. And tomorrow midnight is it. All right. Now, why do I bring up there's other places we can look? Because if I take a look at what some of the more productive corners of our trades have been, it's been and here we go. The bot's telling me it is Outlook. Yeah, I think both those links will get you there, gang. I know some of you probably still have the opportunity link handy, so that's why I mention it. They'll both get you there. One of the things that, and I'll just make sure everyone's got this. Give me 1 second here. Where is this? There we go. So if you go to simplertrading.com/Outlook, and it's the tomorrow, the 7th, is the last day, I believe, at midnight. And then that's the $7 trial package. All right. If I'm looking at what's going on in financials, I think this is really important. One of the things that we've been doing in the mastery is focusing on the strength relative to tech in financials, XLF, XLV. And most commonly, we've been gravitating towards JP Morgan and within healthcare, Johnson & Johnson. Those are actually, coincidentally, the number 2 weighted stocks in each one of those sectors. And the reason I bring up the sectors, gang, is because until we start to see some stability in Apple, and then relatedly the main sector, XLK, tech could be really difficult. I know Amazon shot up, Amazon shot up and Apple shot down. There's a big tug of war going on within the NASDAQ, which, by the way, I'm still bullish, but it's far easier to be bullish in places like not so much consumer discretionary, but Amazon, Tesla. It's a lot easier to be a little bit more bullish. Actually, not even Tesla, Nvidia would be on the list. We mentioned JP Morgan. Again, these are uptrends. And how am I defining this? I'm defining this via the green multi-trend, the lower row. Now, when you sign up for the trial, that is included. And a number of the indicators, gang, are yours to keep with this trial package. So anyway, that's where I sit right now, where it's not going to be necessarily gung-ho into the indices, although I do like the Dow, I will say, of the three. I do like the Dow and I do like the Russell. These are looking great. In fact, I did a video on Friday, and if you've already checked this out, it's called Trade This, Not That. And you can catch it on the Simpler Trading YouTube channel. And Trade This, Not That is this idea that everything we do in our watch list building and ultimately our trade selection is really about what is the best example of an uptrend. And the context of that is what's the best example of an uptrend in the NASDAQ, the S&P, the Russell, the Dow, and then specifically down to the sector level and the stocks heavily weighted within the sectors. If you can continue to do this kind of compare and contrast, you're really working that angle of trade this, not that, right? Just because I don't want to be trading NASDAQ doesn't mean we don't have fantastic trends in small cap via the Russell, RTY futures, IWM, KRE regional banks, which has actually been very good to us as well, XLF, number of plays that are starting to look much better in the energy sectors. So this is a kind of an overview, gang, of the top tier Outlook newsletter, which, by the way, in that trial package will be included because our Sector Secrets Mastery folks get that with their subscription. And this week, I'm taking a look at everything from the 1 month relative performance that shows where I need to be focused. Hint, NASDAQ is not one of those places. What crude oil futures means for not only crude buys, but also energy. And jumping into relative outperformance list within the FCG, which I get a lot of questions on natural gas. And I know Natty just isn't getting with the program. It's not in sync with its seasonal tendencies. It's really not even an uptrend yet. It's just not the disaster that it was for much of last year, this year. But natural gas stocks look incredible. So I have a watch list for that. And that's just a sample of what is in this week's Top Tier Outlook newsletter. All right. So as always, gang, let's get to the questions. And again, if you want to check it out, simplertrading.com/outlook. I believe tomorrow at midnight is it, gang. So, and the reason we have the cutoff is for those of you wondering, yeah, Rob, what's with the cutoff? You know, I'll tell you this, and I'll be very frank about it. Getting a trial month is really important because during the trial month, we keep in mind that we have hundreds of new members that are just learning what we're doing in the Sector Secrets Mastery. And what we're able to do through August is get back to those foundational concepts, get back to the basics. And for a month, it's fantastic for our longtime members because it's things that we've forgotten or things that we maybe didn't even pick up the first time around. For new members, it's not even a choice. This is a very important part of sort of this onboarding process of getting everybody on the same page with the strategies, with the indicators and everything else. So this is not something we're going to offer again anytime soon. I want to make sure it's super clear that, you know, on the 8th, it's done, gang. It's done because you're going to start to miss incrementally more of these foundational lessons. So please don't dilly-dally if it's something you want to do. It's $7 for crying out loud. All right. So first question, Dean asks, would I consider going long pre-market if we get a flush, or regardless of price action? I'm not quite sure what that means. Wait until after 9:30, open and see how we look. All right, so a couple things, Dean. The way I would answer that is something we did last, the non-farm payroll. On non-farm payroll Friday, we traded the S&P. It was actually a pretty good trade. It was an aggro fill on the volatility of the non-farm payroll release. That's a pre-market trade, right? So when you say when we get a flush, we have to know the context for the flush. I don't want to just jump in because equity indices are moving down. I need to know the structure, multi-trend. I need to know why. Was this a hot zone that moved prices lower? If you were looking at non-farm, right? Without that context, it could be really tricky. And I think more so than anything, it's the overall market structure that's going to dictate which direction we'll have bias in. I always want to look at any symbol and have a slight preference for the long or the short side. I want to be really clear that there's a higher probability of follow through in one direction or the other. If I'm completely neutral on a symbol, it's probably not going to be near the top of my watch list, whether that be a day trading watch list or even a swing trading watch list. So I think we have to know the context for the flush, Dean. So that's the most important thing. And I don't see a flush this evening during the Asian session morning. But if you looked at Friday, that was non-farm payroll, right? So the context matters. The hot zone, the reason does matter. And by the way, if we know there's a hot zone coming, the hallmark of a hot zone is it's scheduled. We always know it's coming. Unscheduled events are not hot zones. Earnings are a type of hot zone. Data releases are a type of hot zone. Heck, even the speeches at the different FOMC members or Secretary of Treasury, those are all things that we know are coming, therefore can prepare for and have a setup for, right? Within the context of time and volatility and the market structure at that time. All right, next up, Kathy asks, I would like to take a long position in the S&P, hold long-term in my portfolio. All right, so Kathy, if I'm going to do that, it's going to be based on the weekly. And I don't have a setup right now for that. We haven't pulled back enough for that setup on the SPY or even any of the individual sectors that would be tradable here. So the way that we do that is every week we get together in the mastery on Tuesday afternoons, 3:00. And we go through weekly time frames. We go through the macro, which is gang, there's no such, think about this for a moment. Macro is a slow moving sort of accumulation of data. Macro does not change day to day. And it's certainly not something that day traders use to trade. The events, the hot zones of macroeconomics. Now, I don't mean macro as in big picture or macro as in headlines. Macro is as in the rate of change study of inflation, of growth, of employment, and the way in which the Federal Reserve, the members of the Federal Reserve, will communicate the message based on what they see is happening with this data, what they can justify saying is okay based on the data that we all see. So macroeconomics are very different than talking just macro. Macro itself is a meaningless word. It just means, big, as in a macro lens. We use macroeconomics. And for that, I am a buyer. So I'm with you on the direction, Kathy, but I need a deeper pullback in order to do it. So the insight is I'd start with the weekly. I'd know my macro rate of change, right? And I would be basing it on data. And I show you all what that data is, sort of tie it all up with the Fed Fund futures expectation for what's going to happen next with rates. By the way, that's a pause. It's very likely a pause until sometime between March and May 2024. And therefore, I am bullish, but I'm not equally bullish across all the indices nor all the sectors, right? So I might even say, Kathy, we might find, rather than the SPY, we might find an individual stock or an individual sector within the SPY could give us an opportunity. But that's the process, and we meet every single Wednesday to discuss that. And that's part of what we do in the mastery for sure. All right, follow-up questions. Can we take a look at Generac? So let's go take a peek at that. And it moved lower with earnings. All right, did I say Wednesday? It's Tuesday. If I said Wednesday, I misspoke. It's Tuesdays at 3. All right, so if I take a look at what's going on with Generac, anytime we have earnings coming up, gang, we know that it's a significant event that can break a trend, but earnings will typically not make a trend, right? One session that dramatically goes higher or lower will seldom be the reason a trend begins or even confirms in and of itself, right? The follow through after that is important. And yes, a single event like earnings can break a trend, and that's exactly what happened with Generac. As far as wanting to take a position here, yeah, we are in that window. We are in that window. But remember, the window for earnings, when we start to build those positions, is between April and May, right? So even if you're starting to build that position based on hurricane season starting in that April, May that I teach everyone, um, believe it or not, crazy enough, we're still up from that entry area, right? Do I like this? Potentially, I do. I would just need to see a minor low pattern confirm before I do it. And we're starting to see the signal for it, right? The signal is not the confirmation of the pattern, but rather a signal of the pattern forming. And that's, by the way, the Darvis 3.0. All right. So thank you for the question. Glenn asks, when am I day trading? What time frame is suitable? When I use volume profile, for example, if I'm using a 5-minute chart, which I do I use a 5-minute volume profile? Of course. Yes, of course. So if I pull up volume profile, it's going to use the time frame and the amount of data on the screen. That's the way I use the volume profile, or what's known as the visible range volume profile on TradingView. Yes. So it'll be synced up to that time. But remember, volume profile is not necessarily a time-based analysis, right? The point of control in a 1 minute is the same point of control in a 5-minute, right? It's the same. It's a matter of the x-axis, right? How much data in terms of time or days am I including in that view? How far back? What's the specific date or time forward that I'm measuring volume from? So volume profile will not change from time frame to time frame. If you're looking at price-based volume, which is what we're talking about, which I love. That's fantastic, Glenn. It's not going to change time frame to time frame. It will change based on the amount of data that you're asking or the anchor for the study. But yes, generally speaking, I'll look at the 5-minute chart, and on the 5-minute chart, I'll have the visible range volume profile up. All right. Any thoughts on PayPal after this big drop? So so this actually would be a cool time. I don't have TradingView up at this moment, gang. I actually don't have it running at this moment. But what I would say is it would be cool to pull up visible range volume profile on some of these drops like Generac or like PayPal. It would be cool to see where the point of control for 2023 is. It'd be cool to see where there are some volume ledges in the volume profile by looking at the entire year. So that kind of goes back to, Glenn, what I was mentioning before. I basically want to anchor my VWAP, volume weighted average price, or anchor my volume profile, or anchor my V score, right, to the first trading day of the year, which is Jan 3 for 2023. So that's another thing, JJ, you could do. Look at the visible range volume profile. And then for me, once again, if I want to find where there's going to be a potential pause, I'm going to look at things like the daily price movement range. I'm going to look for things like the minor low, right? And then I would say look for a volume ledge. The bot just pulled it up on her TradingView, and she says it's right at it. So go check it out. But again, you want to make sure you're looking at this year's volume profile. But yeah, go double check it. Go double check it. I don't have it running right now, but this is a good start. This is a good start. It is a neutral market. It was in an uptrend, so I'm bullish neutral or neutral bullish, however you want to say it. The minor low forming will be really important, which means I cannot have a lower low than 62.66 in Monday's action and this pattern still be valid in its developmental stage, right? It's still developing. I don't want to signal after the fact. Too late. Momentum's already triggered. I'm going to get a poor fill. I want my signals to do what I think a signal should do, which gives us as traders a heads up that a certain pattern is forming and forming, not formed, forming. And then I could go about saying, okay, here's the trigger. So the trigger for PayPal, presuming we don't put in a lower low than 62.66. A trigger for PayPal would be breaking above 65. All right, what are my thoughts on XLE? So I want to be a buyer in crude oil, Eva. So that's an easy one. And I want to be a buyer in the XLE. So I look at that. And by the way, I do prefer XLE to Chevron and Exxon. It is very odd that Chevron and Exxon are not quite in sync with XLE. It is very odd, but that just tells you that all the other stocks in the XLE, let me show you another layout that we make available to folks in the trial. This is huge. This is the multi-chart. So I can pull up the multi-chart for XLE and show you what I mean. And when I look at XLE, again, this is very unusual that Chevron and Exxon, the number 1 and number 2 weighted stocks, are not in uptrends. But yet, look at the other 9 names weighted within the XLE. Do you see how the other 9 are up? That's how XLE's managed an uptrend without the help from Exxon and Chevron. Now, getting them both above the 200 is a big deal. I like to use a 200 exponential. That is a big deal. But everything else looks fantastic. If Chevron and Exxon get with the program, forget about it. XLE is going to continue to really fire on all cylinders. However, XLE I like as a buy. The dip OIH, which would be, say, Schlumberger and Halliburton, those are both moving higher. And I do like to use Halliburton as a proxy for the OIH. And then the XOP gets interesting. And XOP has a lot of overlap with natty gas stocks. The natty gas ETF is moving higher. So there's, I would tell you, not just XLE, Eva. I would say look at XLE, look at OIH, look at XOP, look at FCG, and then crude oil via CL, micro, MCL, or even the USO ETF. There's a lot to like here. Yeah, it's a lot to like. All right, so next up, and by the way, we had the webinar already. So if you want to check out the webinar replay, I believe it's at the Outlook page. But if not, if you go to the simpletrading.com/opportunity, you should be able to see it there. And then Outlook is where you can sign up until tomorrow midnight for the trial package. All right, any thoughts on ENPH? All right, hey there, Ivan. Let's see. All right, ENPH. I don't like this one. I mean, it's a short, if anything. ENPH. No, I would not. So this is not a matter of a directional confusion. I would say, Ivan, if I'm going to do anything with ENPH, I would short it, right? The question is, of all the things I could be focused on in the process that I teach in the room, it just probably wouldn't make it to the top tier of the watch list from which is ultimately going to yield our trade setups. So it's not that it may not be a good trade. It's just not going to end up in the watch list of index sector stock where I'm looking at, for the most part, the equity markets are up, gang. Let's not take a handful of sessions and just say, oh my gosh, we're in a downtrend. And then, by the way, what's going to happen now? Now that we're pulling back, especially in tech, you know what happens? Oh, the rinse and repeat of, oh my gosh, here comes the lower lows. Here's what's wrong with the economy. Here's the nightmare scenario. Gang, people who've been doing that for the last 5-6 months have got their face ripped off. Please do not succumb to folks who want to start talking about all the reasons to be, this huge bear and no one else can see why the markets are going to tank kind of stuff. It always happens right about this time. Is August an ugly month? Yes. Did Apple drag down the NASDAQ? Yes. But, look, there's plenty of stocks in the NASDAQ in tech that are in fuego, right? Meta, Google, NVIDIA. So this is where an experienced trader doesn't start talking about the broader averages and nightmare scenarios, although that's great clickbait. And some people are very good at that. Right? What I want to say is, where's the actual trade idea? Not giving you all a ghost story, to say, oh, here comes the big problem. Maybe yes, maybe no. But how do you trade it? Okay. So this is where I will say, continue to look for those markets that are moving higher there and be more focused on the individual sector or the individual stock. So maybe I agree, NASDAQ doesn't look great. I'm not saying it's a downtrend, but it doesn't look great. So do I have to trade the NASDAQ? Not in any way. Can I trade instead one of the relative outperformers in the NASDAQ? Absolutely. Meta comes to mind, Nvidia comes to mind, heck, semis comes to mind. Uh, right here, communications come to mind. So this is where the specificity of building a very dialed in watch list makes all the difference in the world. And there's a lot to like about the Dow, financials, regional banks, and the Russell. This may not just be the time for the sun to be shining on the Nasdaq or even the S&P. But when I look at the Dow, when I look at financials, when I look at the Russell, and I look at regional banks, things are looking pretty darn good. Now, of course, obviously nightmare scenarios can come out of nowhere. But gang, you can't just keep hedging and preparing in an uptrend for some eventual sell-off like regional banks were earlier this year. There's no way to trade that, right? And this is the difference. And it's so true because I see so much of this. Trading is in all the movement that we see day to day or minute to minute when you're a day trader, right? It's in the moves, in the rallies, in the pullbacks, in the follow through, right? Which is very different than what some people do, which is they give analysis, right? Analysis is not trading. Having some target that is some major downside or upside target in the Dow or the Russell, the S&P, and the Nasdaq, that's not trading, gang. Targets are not trades. It's the path to that target that is trading. It's the way in which we can enter, manage risk, and see follow through that is trading. And again, I say this because just stand guard at the gate of your mind. You're going to get a lot of this kind of stuff, especially after a sell-off, right? And I think even especially after the bond sell-off, you're going to get even more fear mongers out there talking about the nightmare scenarios. Now, if you disagree with me, cool, turn this off. I'm not the trader or the ideas for you, and that's cool. A lot of traders love the whole idea of being way ahead of some kind of eventual move, forgetting that's not really trading. So please, gang, please remember, it's not the target, it's the path to the target, controlling risk. That is trading. I hope that makes sense. Can I briefly explain how I use the Darvis box for entry signals? Pete, I do not use the Darvis box for entry signals, but I do use them for support and resistance, right? You can see here, the Darvis box, another, all these levels are automated support and resistance. That's what's so great about them. It's just automated support and resistance. Now, in the Darvis 3.0 or Darvis signals, I do have the minor low and the minor high signal, right? It's not about the fact that the pattern has completed. That's too late. It's letting you know the pattern is in the process of developing. That's why this little arrow comes up. So I don't use the Darvis box alone for entries, or nor is it a signal. It's just support and resistance. I hope that makes sense. I know it sounds like semantics, but having a level that's support in and of itself is not a signal. Having a level of support, say, here, let me show you what I mean. Having a level of support in a neutral environment with a minor low at a Darvis level, that's three things, right? That's three things. And those three things then give me a signal, right? It's that sequence of things that are happening that gives me a setup or a signal, right? It's never one thing. It's never one thing. Even when I hit, say, a DPMR, it seldom is the DP. It's actually never the DPMR only. It's the culmination of what's the underlying structure of the market, right? And then what am I allowed to do with the daily price movement range? And is there another sign that there could be support, et cetera, right? So the signal is really a sequence. What are all little boxes we need to check in order to say at least 2 to 3 things minimum are happening at roughly the same time to tell me that there's support or resistance, and even more so that there'll be follow through from that level. Because remember, gang, the signal or the fill is only one part of the whole process, right? It's the follow through where we make our profits. Okay, next up, Glenn asks, I noticed the point of control changes from each time frame because when you change time frames, Glenn, like I mentioned before, look at the amount of time visible on your screen, right? Find out where that point of control is anchored from. Because when you change time frames on, say, TradingView, the amount of data, the length of time that the visible range profile is looking at will change. So the point of control is changing according to how much data is on your screen. In other words, what's the date to the far left of that chart? What date or time are you starting from? If that's changing, the point of control will change as well. All right. Okay, gang. So that's a wrap. Thank you as always. I will see you all tomorrow for Charts and Coffee, 9 a.m. Eastern. And again, gang, I just don't want anyone to miss it because this is not going to come up again. And this package is insane. 30 days of the daily price movement range, premium package. 30 days of the hourly price movement range, premium package. Grab, wave, Darvis 2.0, the multi-trend, which is a premium indicator we normally reserve only for members or classes. What else? My sector slow stow. There's a lot in this package. Oh my gosh, the top tier outlook. So if you've been wanting to check it out, gang, tomorrow at midnight, that's it. Okay. I will see you all tomorrow for Charts and Coffee. Be good to each other. Enjoy the rest of your Sunday, gang.